pretty good bounce back this morning. We got the ES up 40. Yesterday was a wild day. Wild day. Real crazy day. Real crazy day yesterday. I mean, we were all over the map. All over the map yesterday. I mean, what a wild day. And the fact that we actually even opened and closed up, because we were getting whacked. So pretty wild. NASDAQ upper 200. Dow up 229. Bonds up a couple ticks. Volatility, more importantly, volatility coming off. And gold up another $50. So there is some definite movement into gold. I mean, look at this move yesterday in gold. Like, we actually tanked and now back right up. Silver, same thing. Same thing with silver yesterday. I mean, 52, highs of 52.49 and then lows of 48.70. Crazy range. And that's a big contract. Silver is a big contract. It absolutely is. It's massive. It's a big one. So same kind of like trade though going on all over the board. And I don't know. I mean, I'm going to, everyone seems to be the method to the madness seems to be, it's a flight to quality. I don't know if it's such a flight to quality anymore. I think there's almost a little bit of euphoria kind of setting in. But it doesn't seem to be, ending. It's crazy. So anyway, that's kind of the story there on some of the major indexes. And then I think the other story that's not really being talked about much is the kind of the collapse in crude oil. If you actually go down to a daily, it's been quite a massive sell-off in crude oil. Why are these things here? I know I removed these. I know I removed those. There's a setting in here. I forgot which one it is. It says show. I think it says show. Yeah, contract. I know I never actually saved. I know I actually had that turned off. So I don't know where that changed. Because I can't stand that. That pisses me off. I don't give a shit when the contract changes. What the hell do I care? Yeah, so you look at crude oil. It's been really a pretty steady collapse here, and a lot of people calling for $50 oil. I don't know if we get there or not. mean, this is what we look like on the daily. And if we go back, I think we're going to have to go back 5-year weekly to kind of get, yeah, I mean, still lows down here, still 55. So we're getting close. I don't know where the bottom is. But if I were going to actually see where there might be some semblance of a bottom, it's going to have to be that 55.29, which I'm going to mark right here just so I have it. What does it come out to? I don't even know. I want to make sure I got that. So that spot right there. 55.12. 55.12. Why did it come up with 54.20? What the best. Stock. What is this? Anyway, so there you go. We get set a little alert there on the oil. Go back to the 4-hour chart. I always like the 4-hour chart. So that's kind of the story on the oil. You know, short gold and silver at your own risk. You know, copper as well. Copper's been kind of on a tear again. Big sell-off here back in April, and then it's been kind of a methodical pushback in the copper. So that's pretty much it for the majors. And then if you're looking at bonds have been on a, you know, I've been kind of saying for a long time, and it really doesn't matter. Even last year I was calling for, you know, bonds to kind of make a comeback, and it's been rough, man. Ain't gonna lie, that bond trade has been rough. I didn't write anything down this morning either, because I didn't really see much of what was going on, other than like you had a bunch of banks announce earnings. I think Bank of America came out. Did it come out last night or? Yeah, it came out this morning. Bank of America up 4% after results. You had Bank of America, you had Goldman Sachs yesterday. I did not do anything with any of those. These aren't normally very good when it comes to earnings and whatnot. Goldman Sachs, the banks, they usually suck. They usually freaking suck to do anything with. JP Morgan, again, those all sold off pretty hard, but snapped back pretty good. I don't really know. I can't really see what you can do with any of these. You know, they're all at or near all-time highs. I mean, do they keep plowing ahead? They very well are capable of plowing and continuing to plow ahead. To me, I'm not going to just short them just because of that. And, you know, there really is no, I don't know, personally, I just don't think there's any space in here to do much of anything with any of these banks, because they've all run, and, you know, can kind of say that about just about everything in the market right now, which is why I don't have anything written down today, because there's just nothing really I've seen that looks remotely interesting. Other than, you know, some of these Chinese stocks, I like Baidu here. We talked about yesterday, Baidu. I kind of like it here. I like the volatility is really more of, and wow, that's an old alert up there, 216. I don't know where that's from. That's got to be from a while. I haven't traded Baidu in quite a while. But, you know, from a price perspective and everything that's going on right now out there, I kind of like a lot of these Chinese stocks. And again, it's not like I'm looking for anything huge to happen. But, if you want to kind of play the whole shooting match and the whole sector, do the FXI. That's just an easier way to kind of hit the whole industry, because the FXI will actually encompass all these stocks. And if you go to the Analyze tab, does it list? It doesn't list. Yeah, it doesn't list them in here. But I think if you go to the website, it might list them. But this is actually a basket of Chinese stocks. And it's, managed by everybody's favorite company, BlackRock. What are you going to do? You know what I mean? What are you going to do? You have to play with the devil sometimes to make money. And it's just what it is, And nothing you can do about it. It's what you got to do. But that's the way to play this. And let's look at the options in there. And let's look at the options in FXI. This has actually been a relatively good. This has been pretty good to me over the years, FXI. And if we were looking at that, you can see there's a lot of. It has a lot of strikes. It has a lot of expiries. It's got weeklies and it's got monthlies. I don't know if I would do November. I would probably do either December, actually like January. It's kind of get past that. I like January on these Chinese stocks because you kind of get past that Christmas season as well. And I think, January gives us almost 93 days to kind of get past a lot of the bullshit that's going on. And I think you're still getting a decent amount of volatility in there down the curve to justify doing something. IV rank at 27, though, does kind of suck in here. And if I was going to do anything, I would actually pick out the 70 delta in here, which is about the 37, and do a little bit of a call spread in here if I was going to get long. And the nice thing about this is that it's got dollar-wide strikes, so you can slice and dice this one however your risk tolerance is. So if you want to do something, you could do a very simple trade. Like, you're probably not going to do that, but anyway, these don't look very well priced either in here. But needless to say, you can slice and dice this pretty well. And you can do a lot of nice small trades in here for not a lot of money, which is nice, again, because you got these dollar wides in here. And then depending on your risk tolerance and how much you want to risk, you can slice and dice accordingly. And, I don't think a call spread is a bad spot in here. You're not going to hang on to this thing. You're really, timeline for this, I'm looking like 3 weeks, 2-3 weeks for that sort of thing. Same thing with the Baidu trade yesterday. I don't think I would sell anything in here. I don't think you're really getting paid with that IV rank so low. You can also, if you want to kind of do a little bit more of a neutral type of thing, do a calendar spread. Maybe you do the, if I was going to do a calendar spread, maybe you do the 30, sell the 37. You would buy the 37 and then sell. You buy the 37 and then sell the December 37. Right? And that calendar spread kind of gives you a little negative delta, almost flat. You're almost delta neutral in this case. Right? I mean, having a delta of a negative 107, I mean, I'm not even going to say that that's like a bearish trade because it's negative. I mean, this is probably as close to delta neutral as you're going to get. But if you want that sort of thing, you do the calendar spread. And that would put you at the 37 strike. And again, the beautiful thing about this is that, these are not, these are kind of perfect trades, in my opinion, for kind of, this type of trade because you're not risking a lot of money. You're not expecting a lot in return, but you're not risking a lot of money. And so, either one of those I think is nice. And then just look at it on the curve because that always looks nice. And you got this sort of thing going on here. If you want to kind of skew a little more bullish, just move this up one strike. It's going to cost you, it should cost you a little bit more money. The fact that it looks like it's just because these are not priced yet. But anyway, if you want to skew it a little more bullish, you can see the delta did kind of go a little higher here in this case. So it's a delta of 4. So it's almost like owning 5 shares of the FXI. And you're doing it for $90. Power of options. I didn't even need to write a book and advertise on CNBC and have a brother with, long hair. And, to tell people to buy call options. Anyway, so any one of those is fine. The 37 calendar or the 37 diagonal calendar spread. But as I said, I would definitely refrain from selling anything in here because there's just not enough volatility in there. IV rank of 27 is pretty awful, in fact. In fact, it sucks. That kind of stinks, and that kind of takes, I've often had people ask too, like, what's your threshold for selling options versus buying options? It's really, there is no real threshold. It's more of, I would say it's more historical, meaning that, look, if a stock or ETF, for this matter, normally trades at a certain volatility level, like for this FXI, generally looks like the average here is about 20 to 30, right? It does look like it runs at about 20 to 30. So this is probably about average for this. In this case, I wouldn't sell. Now, if this volatility was running in the, say, 50s or 60s, yeah, I mean, that's well above average. I would definitely take a swing. But there's some stocks that run at a 40 or a 50 IVR, and, it may not be a good idea, even though if it is at 40. So that's why I don't usually put a threshold on that IVR. Like, look, if it's over 50, I'm going to consider it, but then I'm going to go and look and say, hey, look, does it run at 50? There's some stocks that run at 50. And if it's running consistently at 50, me selling volatility when it's at the average volatility level that it is, isn't really going to be a profitable trade. So that's kind of why I won't answer. And I'm not trying to dodge that. But that's what you kind of have to look at. You have to look at what's the average for that underlying. And if it runs relatively at a level and it's higher, then then you're going to sell options. But if it's not, then you're going to buy options. And it's pretty simple. It's cut and dry. I don't usually kind of look at it any deeper than that because if you do, I think you're just going to get yourself in a mental masturbation situation and it's not going to be worth it. So anyway, that's kind of my take on that. And then you got Baba is another one. You got the Babas of the world. I don't know about Baba. I kind of picked Baidu as my kind of go-to one for this thing. You probably could. I haven't looked at this. Actually, let's just take a look real quick at Baba. Again, here's one that it's running at about average volatility here. So I don't know if I'd really want to take that one on. The other one in this space is JD, I think. Now here's one that if I was looking for a volatility trade, this one does look like the volatility is actually running pretty decently above average. This one does look like it averages around the 20 to 30 range, and it's up near 56. So this one I may consider. Plus, I like the fact that it's only $32 stock. Now, this thing has gotten the snot beat out of it. JD, it has gotten the absolute piss beaten it. And let's just take a look. Actually, it brings up an interesting. Perhaps we do have something here. And if I was to go to January and stick to my thesis, you got a lot of options in here for this one. Lots of open interest, which is great on both sides. But for something like this, if I was going to sell volatility, I would do like a strangle. And I would do one that's a little like skewed. I would probably go up to about a 30 and a 30 delta on that side. And then on the upside, I would probably go and pick like a 39 or even a 40. I would probably do a strangle in here. And the reason I would do a strangle is because low price stock. Anyway. Got to take off for a second.